everyone. Wow, we are just racking up the participants numbers here. Welcome to today's expert venture capital panel on impact investment in venture capital, brought to you by a collaboration between Girls in Tech Singapore and INSEAD's Indevor Club, which is the impact investment and social impact club at INSEAD. My name is Miriam. I'm VC lead and board member at Girls in Tech and also on the Indevor leadership team. Together with Haley, who is Managing Director of Girls in Tech Singapore, we will be hosting and facilitating this workshop for you today. And wow, it's really nice to see so many familiar faces and also so many new faces as well. We will be launching a audience poll in about now, just to help the speakers kind of gauge who is in the audience and better tailor the conversation. So that should be launching very soon. We do encourage you to switch your cameras on. It's always nice for the speakers to be able to see who they're speaking to. Time will be dedicated at the end for Q&A, so please do direct your questions to either Haley or I, so the hosts of the conversation. We have an incredible panel of speakers lined up for you. They are very experienced venture capitalists, all leading the investment decisions in their funds. First of all, we have Karen McCormick, and she is Chief Investment Officer at Beringea. We have Leesa Soulodre, she is General Partner at 3i Ventures. And finally, we have Gail Wong, she is Managing Partner at Her Capital. We are also super lucky to have snagged a star professor from INSEAD, Claudia Zeisberger, in order to moderate the event today. Claudia has conducted extensive research on private equity in emerging markets, in venture capital turnarounds, and also risk management. She joined academia in 2005 after a 16-year career in investment banking and also alternative investments. She is founding committee member of the Financials Women's Association in Singapore. She's also angel investor and last but not least, startup mentor. With just about that intro done, Claudia, passing over the virtual mic to you. Welcome.
Okay, good morning, good evening, good afternoon, wherever you may be. I can see a couple of alumni and friends of INSEAD, and I know you are not in Singapore. So it's my pleasure to welcome you. Thank you to Miriam and her team, and to Indevor, INSEAD's student club, as well to Girls in Tech for organizing this. And yeah, thank you for bringing together such an interesting and experienced panel for a question on venture capital has impact, or does it? So the overall theme in amongst investors in the alternative space this year has clearly been impact, responsible investing. So obviously this is a timely question to ask. Now, before we jump into those questions, and Miriam, I don't know if you want to share the result of the survey. If everyone has submitted, so we get a sense of who we have on the other side. I want to work in VC or investing in the future. Okay, so we got 50% of the audience that want to have a job. So, well, I will not be hiring, but maybe my 3 co-panelists may. So we'll find out about it later on. Very good, but we have a very nicely balanced audience. I'm interested in the 16% with none of the above. So anyway, we'll come to them later. We ask them those questions. So let me basically give you a little bit more background, starting off with our 3 panelists. So you know who we have on the panel before I jump into question. The target is to have about 30 minutes of questions for the panelists, and then we will open for Q&A. You're welcome to share your Q&A in the chat already as we're going through it, and Miriam will kind of help me to consolidate it and hopefully address the questions as we go through it. So allow me to start off with Karen McCormick. So is an alumna, an INSEAD alumna. She's the one based in London. So thank you for the early startup and for the early rise. So Karen looks after Beringea, which is a venture capital investor with about 700 million under management across the funds in the UK and in the US. So typically investing in Series A and Series B, and backing entrepreneurs across a range of emerging technologies, global industries, software, fintech, health tech, and esports. They've recently backed several businesses with a focus on sustainability and social impact, including Luxury Promise, resale marketplace for handbags, and Commonplace, a platform for communities to share feedback on building and infrastructure projects. So, Karen, thank you for joining us, and we will have some questions in a few seconds. We then have Leesa. Leesa, who is joining us as general partner at R3I Ventures. She is based usually between Singapore and Luxembourg, and today is physically in Singapore. I checked on that beforehand. R3I connects deep tech and health tech visionaries with access to capital to scale breakthrough innovations for impact. So they select only companies that are backed by deep scientific research and that are protected by patents and trade secrets. So very deep tech, very much at the cutting edge of investments, focused on pre-seed all the way to Series B around Europe, US, and Asia. So pretty much a global perspective. And then Gail is joining us from Her Capital. She's also right now physically based in Singapore. Her Capital is a seed venture fund that invests in female-founded, scalable businesses in Southeast Asia. So the most focused fund on our panel, on a mission to tap into overlooked female founders and to capture the potential for superior returns. So thank you very much again for making time. And let me kick off to start straight away with a focus on impact in VC. What does creating meaningful impact mean in the context, in the world of venture capital investing? And what does it mean for you and for your fund specifically? Maybe I start off with Karen, then go to Leesa, and then to Gail.
Yeah, thanks, Claudia. Really spot on questions. And I'm not sure there's a straightforward answer. So our funds are commercial funds. We don't run specifically social impact funds. We have looked at raising social impact funds in the past. And there's, as you say, it's certainly the flavor of the moment for all the right reasons. The challenge for us has always come down to how do you measure it? And while we've had a lot of interest from LPs in looking at social impact funds, it generally becomes difficult when we look at what's really the difference between what we do today versus what we would do in a social impact fund. And so I would think about separating a commercial fund who invests with a conscience and invests responsibly and looks to do no harm from specifically a social impact fund where the purpose of every investment is a social impact purpose. So, for example, one could easily argue that Uber is a social impact business because it's reducing the number of cars on the road. But is that actually a social impact business? And I think one of the challenges is that almost any business, with a few exceptions, could find a way to describe itself as a social impact business. And for us, trying to delineate between what just looks like everybody else's commercial portfolio versus what is actually the exception to the rule and wouldn't necessarily be funded by a traditional VC fund. And does that make that a social impact business? In truth, for us, I think it needs to be a combination of both, because investing in companies that aren't necessarily commercially fit for purpose is just a difficult thing to continue to do on a continuous basis. So I think the balance between commercially driven companies where the objective is to do no harm and to do more good than harm is probably where the balance lies for us.
Okay. Leesa, you want to take a stab?
Yeah, I guess the biggest thing that we're building at R3I Ventures isn't only returns for our LPs, right? It's a place we always wish we could work. And if we can deliver the capital that empowers our founders to solve the world's biggest problems in a smart city, which for us means healthcare, energy, space exploration, food and agriculture, and clean water, that allows us to accelerate their impact, and in doing so to deliver that 10x, 20x return, then for us, because that gives us a capacity to transform our planet, then we believe that's a really good purpose for venture capital. I come from the world of responsible investment. I helped to build some of those ESG indices in the very early days with RepRisk and GMI. And it's fair to say that I've seen the power of responsible investment and how to change the flows of capital in doing so. And so we are firmly committed to the principles of responsible investment, and our fund is purpose-driven specifically for that impact.
Okay. And Gail, please.
Sure. I think we're squarely in the gender space, so that always brings in the question of SDG 5. I would say we are focused commercially, just looking at access to capital to female founders and the open space there is in terms of being an investor of choice, being investors who know how to support and nurture female founders, provide fit for purpose capital, and partner them. So it's not really about improving quality of life for women and girls in developing countries, for example, which often gets confused with our mission. But I have to say, in gender lens specifically, there are probably a variety of ways that impact on gender lens is practice, right? For us, it's really about female leadership on the team and a female founder, but people also look at composition of the employee, workforce policies, and also the end consumer in some cases.
Right. So, I mean, I could put on my my slightly cynical hat and could argue that venture capital, even in its most basic form, has impact. It has impact because it ultimately channels funding to those deserving founders that will change those huge problems that we have in the world and come up with new inventions that will ultimately maybe make all our life better, like as a consumer, not necessarily as a professional. So I could say this is what venture did already in George Doriot's days in the early 50s, when the whole idea of venture capital investing was kind of invented, if you like. Now, is venture capital along those lines inherently impactful? Or if I now put my LP hat on, do I as an LP need to nudge those funds to create that impact and make it a central part of their mission? So is this something, or can I just, if I put myself into an allocator's shoes and say, well, I'm allocating to venture, by definition, it has impact. So I take my venture bucket and let that tick the box of impact. So maybe I'll start with Leesa this time.
Yeah, and I guess let's just focus on gender as an example of that. And actually, something better, healthcare. So I'm in deep tech, and we would argue that deep tech is inherently impactful, right? We're working in transforming to renewable energy. We're working in terms of better patient outcomes and saving lives, reducing the burden of over-hospitalization or rehospitalization. Everything that we touch, almost inherently by its mission and its purpose, has impact. So it's often not difficult in our field specifically in order to be able to make that correlation. I think if you're talking about building a mobile app that has a marketplace play, then you're probably, a little bit more stretched in order to find that impact. But in my business, in deep tech investment, in med tech and healthcare investment, it's inherently part of its DNA.
Okay.
I do think it's a tricky one, Claudia, and I think you're right to kind of push the cynical button on it, because there's a lot of, greenwashing that goes on in lots of different ways. However, I would say it's not necessarily a bad thing that there's often a confusion between what's impact and what's just commercial, because the net result is kind of the same. The reason venture capital exists as an industry and continues to exist as an industry and thrives and is even growing is because the net impact to society tends to be positive. Both from the commercial returns, but also from the businesses that are created and the benefits that we derive from those businesses. And I do think pretty much any business can say we create jobs. Any venture capital business can say we create jobs. The challenge becomes what happens to the rest of the value chain. So AI, massive industry, creating a ton of jobs, huge amount of money flowing into it. Is the net result going to be that actually there are a lot of people, data analysts or otherwise, who are now out of jobs because the AI can do the job for them? But the net benefit to society is that we get products and things that we want better, faster, cheaper. So I think it's actually very, very difficult in terms of the measurability, and you can almost spin anything to be a positive social impact, but unless you're measuring all of the impact on society, it's a really difficult question to answer.
Right. So, Gail, how do you look at that? I mean, as you had already said, I mean, I can see that people look at you on the surface and say, "Oh, you know, you're dealing with empowerment of women."
Yeah. Well, I think that we see that as having a benefit to society and the world in general. If you have diverse innovation that's being funded, I think we're going to see more needs being met in whatever is brought to market. I want to pick on something you mentioned earlier, which was deserving founders, right? And when we think about impact in VC, we focus a lot on the what, like what are the products or what are the outputs, and I think something that is emerging is also looking at the how. So how are VCs working with their companies? Is it creating work cultures that are toxic? Is it creating an unreasonable focus on growth at all costs? This is probably an alternative view because of the circles that I'm in, and I interact a lot with individual LPs and people you might not even call LPs, sort of investors at a smaller scale, but that reflects sort of the ground up sentiment. There's definitely a sense that VC had, in some ways now, as its practice is broken in some of the beliefs, right? And the kind of people that are funded. That's very much tied to, obviously, our mission, where we're seeing just 3% of funding going to female founders even today.
Yeah. So clearly, I mean, I think there's headroom in the broader space of VC in terms of improving it, whether it's allocation to minority investors, whether it's to women, whether it's to specific areas. And maybe there's even a bias that too much money is going towards certain sections, towards certain industries that are fashionable right now. So we've seen that at any point in time in the last 30 years in venture. Now, but Gail, you mentioned the drivers kind of like of that conversation. So amongst the VC funds, so investee companies and the LPs. So we have basically in the ecosystem those three players. So who do you believe has the most traction in driving basically behavior towards impact in the VC space? So who are the ones that will kind of, let's say, in 10 years' time, when we all come back and we have this panel again, when we look back, who will have made those or nudged those changes in the right directions? The VCs, the LPs, the investor in those funds, or the entrepreneurs that I would argue nowadays, with plenty of VCs around, to some extent have a choice of who they go with for their investment choice. So I'm going to jump to Karen again to start with.
Yeah, really good question. I think it's going to be the LPs and the consumers. And look, it's not because VCs are evil. Like it would be very difficult to find a venture capitalist who says, I really don't care about the earth, and I don't care about trashing the economy, and I don't care about the progression of women or diversity. Like I think most people are inherently trying to do the right thing. We just haven't really found out a way to do it yet. Like there's too much systemic discrimination and too much ingrained in systemic challenges in the pipeline to easily fix. But the pressure coming from LPs and the pressure coming from consumers is making a big difference. And I think that really does filter down. And I also think in terms of social, just responsible investing generally, it's a lot easier to say what you're not going to do than what you are going to do. So for example, we could say we're not going to invest in management teams that have all white male. We're just not going to do that. And we do measure that, and we do look at that as one of the things.
So which is usually the starting point, right? Negative screening. We shall not do X, right? Exactly. Do not evil. So, and then we basically move from there, right? And I mean, there is a spectrum anyway when it comes to the whole conversation around impact, which we could have a much longer conversation around. Leesa, do you want to jump next? Who's going to have, what's your guess? Who's going to has the biggest impact, for lack of a better word, on the needle moving?
Yeah, I firmly believe it's the pension funds. The pension funds are accruing assets under management at a record pace, and their allocations to asset managers and their allocations to venture are becoming more and more tied with side notes, right, that are specifically related to environmental, social, or governance commitments. And it's really interesting when you look at who's actually investing in sustainability. UBS did a study, and 39% of their investors globally were actually coming asking for impact, right? So I go back to Karen's point about the consumer demanding it. And similarly, when you look at the age groups, it was 56% of them actually came from that age bracket of 18 to 34. And that's impressive. And we've seen, more than 1/3 of assets under management move to some form of responsible investment or impact lens over the last 10 years. And that number is increasing exponentially in countries like Australia, like the US, like Western Europe. But there are many regions in the world that are taking a long time to catch up, in particular Southeast Asia. And I would encourage more pension fund allocators and more sovereign fund allocators to mandate ESG and impact as part of those compliance requirements.
And Gail,
Yeah.
what's your best guess out of those three?
Well put by Karen and Leesa. I think the entrepreneurs and the VC funds are stuck in the middle, and it has to be pulled through the value chain.
Yeah, no, I would agree. I mean, and I've just, not in the context of venture, but in the context of growth equity, I've had several conversations where the funds have told me that they were asked by the LPs, aren't you an impact fund? And I mean, one was in agriculture, which again, we all have to eat. So you could easily argue, yes, we're doing agriculture, but none of them had it actually in their LPA. Can I ask you guys, does any one of you have impact as one of your mandates in your LPA?
Yeah, we do.
Leesa, you do it, yeah. Okay.
Yeah, absolutely. I mean, we're an impact fund, so we should, right?
But I think that's the next part then, which goes back to the LPs, right? Ultimately, if the more LPs asked for it, what I was surprised, I had a conversation 3 times that I heard from funds that were asked to put impact into their LPA because the LP was comfortable with them. And obviously by re-upping to the next fund, they were at the same time ticking a box, right? So they were obviously able to say, yes, we're committing to that, whatever X% of impact investing. But yeah, I think the LPs will have play certainly a large role. Have you seen, and maybe we'll start with Leesa with the question, have you seen LPs actually have real measures attached to it? Or is it more like, I wish to have something, I don't know, in form of a Christmas card on the impact in your fund? Sorry, being too cynical.
Yeah. So I'm cynical in that I select my LPs and my fund of funds extremely carefully, right? Because my DNA is I'm a responsible investor. So we had 5 LPs come to us and we turned away 2 simply because they didn't match the ethos and the values of our fund. So I think it goes both ways, although probably I would imagine funds are currently not as choosy as I am at this moment in time. But I can share a story where I know of a fund that was seeded by a weapons manufacturing organization. Now, if I was in that fund and I was a healthcare entrepreneur, there is no way on the planet that I would be coming to that fund to seed my healthcare company, right? It's diametrically an opposite of our mission. And so I do think the DNA of the source of funds really does make a difference. And if I can just share some local family stories, because, we don't just take money from fund of funds, we also take money from family offices. And when I speak to my family offices, they're actually looking for 3 things. One is they're looking to have a societal impact, so job creation, number 1. They want to improve health outcomes for their families and the communities that they live in, number 2. And number 3 is that they actually want to teach their children how to actively deep tech invest and how to actively impact invest, because they don't want it to get lost on the succession plan. And so I love that commitment to ensuring that this purpose doesn't get lost in the succession plan. And as you know, succession planning is probably one of the biggest challenges facing families across Southeast Asia.
Sure. So, and nevertheless, I mean, family offices usually absolutely right. I mean, have an easier time allocating and defining how they or defining impact, what it means for them. Much more complicated to do that for a large pension plan or for an endowment fund. So so there are some interesting conversations going on. Shall we shall we move on to the fundraising side, a little bit away from the impact side and circle back again? Because we're going to get some questions later on. I know that with regards to what's it like right now from a fundraising point of view as a VC. So let's start with the fundraising as a VC. What's the environment? What is your sense? I'm gonna start with Karen, because I had you on a panel just, I think, was in March, right in the middle of the COVID environment. What's your sense? What you're seeing in Europe? Is fundraising continuing for VCs? Are VCs closing funds? Are the LPs interested? Are things moving again? Because everything kind of stopped for a while, as it does in times of stress. And then we'll jump back and have a look at what Leesa and Gail are seeing.
Yeah, I think LPs are investing, but not in brand new things. So generally investing in the people they already know, or re-upping in the funds that have been successful, or the blue chips who have always had kind of more demand than supply are continuing to raise. But if you're trying to raise cold, either as a new fund or from new investors, I think it's really still quite a difficult period of time.
Okay, so still a little bit risk off, right? Gail, have you seen anything from your fundraising, or also what you've seen from other funds in the ecosystem here in Southeast Asia?
Yeah, well, we are definitely experiencing that as a new fund. I think there's also a focus on certain sectors that are hot now, healthcare being one of them. And we're finding that while the gender agenda is a bellwether, but it's still suffering from being seen as a niche and overshadowed by some of the forefront issues. Sure.
Okay, Leesa, and maybe also a little bit forward looking. I mean, what's your expectation, since you're spending time between Singapore and Luxembourg?
Yeah, it's really interesting. I just compare myself to my girlfriend Kinga, who was the founder of Xperia Fund. She has 80 LPs to deliver her a $20 million fund. And in contrast, I'm going to have 5. I'm in the process of closing my fund, so it's a timely question. And, this contrast around size of allocation, I think, is really interesting. And also the types of LPs that are coming into the fund. There's a lot of micro funds around at the moment because they're basically taking that first closing, saying, okay, I'm just going to go with what I have. And then based on the performance of that fund, I'll raise a bigger fund next time. And it tends to be the case, right? We start with a smaller fund, we get some track record, and on we go. But it's fascinating when you look at the performance of funds, right? Because everyone's chasing performance, is that actually first-time funds for 9 out of 10 years have historically outperformed those that have traditionally had multi-funds. And also what you're seeing is this rise of mega funds. And, when people have $1 billion in dry powder to deploy, I question, as an entrepreneur first, what is the quality of that investment? Are they really going to be an active investor in my fund? Because I'm getting more than just capital, right? As an entrepreneur, I'm looking for access to markets. I'm looking for access to other smart capital. I want someone to be active. And I don't think that's always a promise that is delivered on in those mega funds. So I think it's a really interesting climate, and that contrast. Europe is growing up into early stage venture. I still think it's quite early. We're doing a lot of education into the Luxembourg ecosystem. And I think Singapore is traditionally very risk averse, but deep tech is a non-volatile asset class. So we are actually experiencing a lot of uplift in contrast to a general market tech fund.
Yeah, but I would agree with you. And it goes to when Gail mentioned as well. I mean, the statistics really speak in favor of first-time funds, but I haven't seen the needle move very much in the last 20 years with regards to the number of LPs that are able and willing to invest in first-time funds. Most of the pensions just are not allowed to do that. And there are very few that actually can do that. But clearly there's a good argument to be made. So here's a pitch for Gail. So all the LPs on the call, so give Gail a call. So now let's turn the table. The founder's perspective. You are all very experienced investors. What do you advise entrepreneurs right now? Because clearly, I just had a mentorship panel last week, and there were lots of questions from the founders on what's it like to raise money. I need to go out in the next 6 to 12 months and raise money. What will I find out there? So, Karen, you want to kick it off?
Sure. I think it depends on the stage of fund. So one of the things that I think hasn't really slowed that much, certainly in Europe, people are still investing. Like we all still have dry powder. We all still have to get it out the door. And it's also in March, we thought there was going to be really a car crash across our portfolio in the economy, and that didn't happen. A lot of our portfolio are still performing really well, especially on the consumer side, but even B2B. We have a handful of things that are kind of in rescue mode, but they would mostly be things that are solely travel focused or solely in a space where there's just nothing happening. But for the most part, things are still okay across the portfolio, and we're still investing. So there's definitely money to be raised right now, and people are aggressively and actively looking to do so.
Okay.
I think the things that would be the most sensible to do, one of them is make sure you have experience. So if you're a first-time founder, or this is a first-time business for you, or you're relatively young, make sure you have people around the table with you who have a bit of gray hair and who have been in this industry before. So make sure you've got that experience, and then also make sure you have controlled cash burns, because at the moment you either need to have 300% year-on-year growth if you want to be a high burn company, or you've got to have capital efficiency. So a route to profitability in the relative near future.
Okay. Leesa, what do you want to add to that? What do you want to hear from an entrepreneur so you whip out your checkbook and write a check?
Yeah, look, I think ultimately we want to give a check, right? So there's 3 questions that we're focused on that literally keep you at the table. And that's, what problem are you solving? And I really want to know that after COVID hit, that you went back out and you re-explored with your customer, what is that desired customer experience, to make sure that you are still solving the right problem. Second is, I want to know that that market size is significant, right? And there's an opportunity to get a large growth out of it. And third is, most importantly, I back the team. I want to know that you're the team that is capable of solving it. And when we talk about that magic criteria, I want to know that your solution is going to be oxygen, that is, I can't live without it. It is aspirin, that is, it solves that pain. Or it is jewelry. And the best investments I found is that they have an element of all 3. They're oxygen, they're aspirin, and they're jewelry.
Okay. Gail, what are your top questions to entrepreneurs, or what would you like to hear?
Well, I think Karen and Leesa circled important ones. I personally, because of my focus on people, I like to also understand what's their headspace, how are they dealing with the shocks? Is there resilience, not just like psychologically, but in their systems, in their teams, to navigate a situation like that? It's a best test, I think, of the ability to pivot or the ability to tease out new opportunities. That's always a great instinct to back.
Right. And I mean, for us, for Asian entrepreneurs, I mean, we haven't really had a lot of opportunity for them to show that they can shine, right? I mean, we haven't had a really good crisis for a long time. So it's kind of interesting to use that as kind of the acid test. Okay. Now, let me have a look at some of the questions that have been asked. So one common view, this is a question, and I'm just going to read it off the chat here. One common view on VCs is that they're only investing in potential unicorns, or alternatively seeking to exit in short period of time with exponential growth. Some companies, industries are not made for this model, but have sound business models and impact. They may feel basically unloved or overlooked. What would you say to someone, a startup or a company that's coming to look for funding, that is kind of struggling with this issue?
So actually something that we did with our fund is we built an Evergreen fund specifically to solve that problem. And especially because we're in deep tech, right? It takes us time to get out the gate. It takes us time to get to revenue. And by the time the cash machine is churning and we're getting the impact, you know, the families may not necessarily want to turn that off, but in a traditional 2 and 20 model, you have to exit. And so we built an Evergreen model specifically to solve for that problem, to realign the incentives with our LPs and to ensure that our founders had sustainable access to capital. So we've done it a little bit differently.
Okay, so which is basically you've gone back to and questioned the model behind it. So obviously, I mean, the closed-end funds to some extent forces your hand to kind of look for those investments. Okay, Karen, do you want to jump in?
Yeah, I think it's really important. I take the point. It's really important to know who your investors are and to do some research, because there are a lot of us, including Beringea, who are not unicorn hunters, and we value capital efficiency and organic growth quite significantly. And part of the problem is, I mean, there's the Valley, and then there's kind of the rest of the world. And within London and within New York and within Singapore, there's going to be kind of Valley-like investors, but the vast majority of the market are not going to be able to fund unicorns unless you've got funds that are multi-billion in size. You can't afford to lose a couple $100 million before you find out if it's going to work or not. So I think while it's the quieter end of the market, there's kind of the silent majority of people who are really looking for early stage growth capital. So I think it's there. It just is not quite as obvious because it's not quite as splashy. But one way to look at it is look at other companies that have grown pretty well, but maybe didn't become specifically unicorns, and look at who their investors were.
Right. Gail, you want to add to that?
There's definitely an image asymmetry. The great VC stories tend to follow that profile, but many female founders tend to build their businesses more for sustainability than for that octane growth, right? And they, like Karen said, they are there. It's just quieter. There's no light shone on them. There's no vanity metrics. And there are a number of companies, even in the traditional tech space, forget throwing out any impact measures, who are cash flow positive, even in early stages. Like, I would argue, since when did a good business measure become burning through lots of cash and raising, double-digit $1 million rounds? I think it's worth questioning that.
Very true. I mean, I also like to add to it. I mean, the broad industry is kind of focused on. I mean, unicorn usually means a B2C business. So there are fantastic B2B businesses which usually don't get a lot of attention and kind of come out of the woodwork, and everyone is surprised because they've never heard the name before. And there are funds in Europe and in Southeast Asia that focus specifically on the B2B side, because they feel that's where actually the impact can be made, and where they basically get also decent entrepreneurs. Now, I have a couple of questions. How did you get into VC? So I don't know how many, 3, 4 questions. This has been asked many times. So how do you want to start? Let's start with Gail this time.
Sure. When I exited banking, I probably said I don't want anything else to do with finance anymore. I went off in search for a purpose and, working on meaningful projects. But I think that's the fate I'm meant to do. But I found a way to do it with a mission.
But your background was originally in banking. You came from banking.
Yeah, I did work on, financial services and tech transactions. So it does lend itself more to VC. So having that sort of corporate finance foundation is one thing. For me, the other piece was working with people. That was the biggest risk and uncertainty that I couldn't quite navigate as a banker or as a wannabe entrepreneur. I suppose it's a function of where Singapore is as a startup capital in the last 5-10 years. Sure. That has brought that sector to the forefront. And I've somehow continued to mentor female leaders, female CEOs of startups, and that's what brought me back to my roots.
Okay. Leesa?
I also live with a VC, so can't escape it.
So, okay. Leesa, please.
Yeah, I probably have the most diverse background of anyone on this panel. I started my career to be a doctor in the third world and joined the army as a medic after university. And I rolled a truck down the side of a mountain and didn't walk for a year. And I tell you what, if you want to learn how to live, just do that. Afterwards, I was moved into an all-male battalion in a signal squadron and went into tech. And for 23 years, I've been building, growing, and exiting tech companies. And so when I moved down to Singapore in 2013, I moved very heavily into angel investment after coming from really growing and building responsible investment, ESG analytics in the financial markets, working with 210 of the biggest pension funds, asset managers, and endowments across the world. And during that time, I had an opportunity to work with CalPERS and CalSTRS on their 3D director data source, which is putting diverse directors onto boards. I had the opportunity to build the first ESG fund in Malaysia. And I really had an opportunity to have a voice in the context of corporate governance and disclosure in this region. And I think that's really what brought me back to venture capital, because I looked at the vulture behaviors in the ecosystem. I looked at the Enron-esque characteristics of the large companies that founders were working with. And I wanted to change the paradigm. So I always say to people, I'm a serial entrepreneur. I'm always founder first. And I'm literally saving the planet one startup at a time, because we're providing that safe pathway that we always wanted when we were entrepreneurs. And then the last thing just to add is that with the 2 and 20 model, which is roughly more than 90% of funds today, anyone in the room can today go out and start a venture fund. And you can immediately jump on AngelList, you can start syndicating rounds, and you can build SPV, special vehicle upon special vehicle, getting people to invest in the deal, not necessarily invest in you, and start to build that track record of performance. And that's a very exciting democratization of venture capital. You don't have to go to Harvard. You don't have to go and have worked in that investment bank. You can literally build a venture fund on the back of any great investment or deal. Yeah. And I encourage you to do that.
Yeah, I agree. I mean, keeping an eye on AngelList, I mean, just even like tagging along there will give you a pretty good sense of whether this is what you want to do, because it's kind of a long-term commitment. Karen, last but not least, how did you end up being in venture?
Yeah, I can't possibly go after Leesa. That story was too amazing. I never rolled any trucks anywhere. All in more traditional career, consulting, and then basically industry, and then into venture capital. I started 15 years ago when venture capital didn't really hire. It was mostly like 2 or 3 partners in tiny companies. And it was 2007 when I joined, and all the bankers were too well employed to look elsewhere. And so they had to fish in the consulting pond. First time that my cohort at BCG had ever really gone into venture. But the advice I'd give now is most funds, I mean, the ecosystem is much more evolved. There are much bigger funds. The structures start to look a little bit more like consulting firms, where there are analysts, associates, principals, and then directors and partners. But you can actually just get hired in. And we do most of our recruiting at the analyst and associate level. Most VCs aren't going to hire a partner unless it's somebody you've done deals with and seen in the market for a long time. So you're probably best off starting early-ish. It doesn't have to be, in year 1 or 2 of your career, but you probably want to start within the first 5 to 7 years looking at going into VC. And then headhunters is where we get a lot of our deal flow. So we try not to poach directly from competitors, but look for people who are looking, which means headhunters are the best way to do it. So one way that is not a good way to get a job in VC is to call or email a bunch of VCs and say, could I have a coffee with you? That's fine to do exploratory research, but you're highly unlikely to get a job that way. I absolutely do think the criteria would be financial literacy. So you don't need to be able to build a model from scratch the way you do in corporate finance, but you absolutely need to understand your way around a P&L, cash flow, and balance sheet. And then demonstrating your ability to find deals, because that's the hardest part of the job, which means you need to be well networked in the industry. You need to know startups. You need to know founders. Ideally, you have a handful of high profile startup founders that you can say I'm connected to, because the best deal flow all comes through word of mouth and who you know.
All right, so I'm getting the time's up from Miriam. So first, thank you all 3 very, very much. You all are busy, so we really appreciate that you made time for this panel. Always a pleasure to always a pleasure to be on a panel for a change with 3 other girls, if I may say so. It doesn't happen often to me. So Miriam, shall I hand back to you?
Yes, thanks, Claudia. No further remarks on my part. I really just wanted to thank you and thank the 3 venture capitalists, so Leesa, Karen, and Gail, for having dedicated our time to us. We have actually recorded the session, so I will be sharing also the recording in case anyone wants to look back and re-listen to some of the tips, the advice, and the insights that were shared today. Thank you all again, and have a great day.